There's a lot of people out there, even in our community, that say, well, the gold standard doesn't work. The problem is we printed more dollars than there was gold to back it up. So the gold standard works if and only if the human element is honest.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. David Morgan joins us today. David is a widely recognized analyst in the precious metals industry and consults for hedge funds, high net worth investors, mining companies, depositories, and bullion dealers. He is the publisher of the Morgan Report, a world-class publication designed to build and secure wealth. He is the author of the Silver Manifesto and a featured speaker at investment conferences worldwide. And we're delighted to have David join us once again today. It's time to saddle up and silver up for the Silver Guru. David, welcome back to SBTV. How are you doing?
Well, Patrick, I'm doing all right, and it's good to see you again. It's good to be back on Silver Bullion TV. Thank you.
Glad to have you back, David. We appreciate it. David, it's about that time of the year where we look back at the anniversary of the temporary closing of the gold window where U.S. President Nixon back in 71 closed the gold window. What do you recall about that time? I know you were a young man, but what do you recall about that time?
Well, I was still at that, even as young as I was very attuned to sound money and, fiat and the problem with it. And James Blanchard, who is the founder really of the New Orleans Gold Show or Gold Investment Conference that Brian Lennon has done such an excellent job taking over. And he was in a wheelchair and went to Washington, D.C. physically and went up the steps and basically stated that this was, I'm just paraphrasing, I don't remember the speech, but basically said, this is the beginning of the end. Again, that's my wording, but he was very adamant about what happens when you go off a gold standard. So from that time until now, of course, we've seen a deterioration of the dollar. And I don't remember the numbers because I remember them from the founding of the Fed in 1913. We're down like 98%. But it really accelerated from 1971 on. And I don't know what it is, 80 something percent. I'm not sure. But the idea is that once we went off the gold standard, the debasement of the currency accelerated. And of course, it continues to accelerate. It becomes an exponential curve, which we're witnessing with the increase in the what I call funny money supply. And we know that from the deficits that continue to increase year over year. And that exponential curve puts you on a trajectory to go into a hyperinflation. Now, I've stated many times, I doubt that the US dollar will go into a hyperinflation, of true hyperinflation, but it could. And then it gets down to, well, what is a true hyperinflation? And that's a tough one because no one's really defined it. Is that, 20% increase per year, 100% increase per year? In other words, a depreciation of 50% in a year's time, where a dollar buys half of what it did in a year's time. So I don't want to get into that debate. I think before that gets to, a Zimbabwe level where the dollar truly fails, it's failing, but it won't fail to the point where it isn't used or recognized as a reserve currency. What will happen is they'll put us in a new system. And of course, that's what the central bankers have been talking about now for the last few years. And we could get into that later. So long-winded, but it really upset me because I was attuned to it. Remember James Blanchard, and I thought, and at the time I thought, and I was so studied with the precious metals newsletter writers and books that were printed at the time, Harry Brown and James Sibbett and Jim Dines and Jim Sinclair, and even Doug Casey was kind of late to the party. He was young back in those days, and so was I. But and so I had a really strong bias into, what would happen in the future. And me and many of us thought, we had maybe 10 or 20 years before we'd have some kind of upset. We really had one in 10 years with the, screaming inflation in the United States, officially 13%. And then Volcker came in, smashed down the gold market by raising interest rates well above the inflation rate. Where you're getting like a 7% real return on your money. and that just quashed the gold and silver markets for like 20 years. And so we had really a 30-year reprieve before gold bottom at 252 in the year 2000. And then we've had a bull market since, although it's been pretty erratic. It was up 11 years in a row from 2000 to 2011, September. And then from there till now, it's made a great big bottoming pattern. It's called a cup. It's gone kind of in a U form. And now it's trending sideways, ready for a major breakout. And the cup and handle is a very strong formation. So I expect gold to do what I've always said, which is really outperform other asset classes once we get into the third leg up, which I think is, I won't say imminent, but I think it'll start before the end of this year.
Yeah, quite a bit has happened during these decades, and during but with Nixon, it kind of fascinated me. I even went and read his book titled "3 Days at Camp David," which was about the meetings Nixon had prior to closing the gold window, and he was faced with needing to devalue the dollar for trade exports, having enough dollars for war, getting people back to work, igniting runaway inflation, or raising rates to slow inflation at the expense of voters losing their jobs. And of course, they were also realizing that a gold drain was happening. Now, all of these things and more are all happening at the same time, all at once. David, if you were Nixon, what do you do?
Well, I think he was forced into it. He had to. And the reason being, as you know from the book, is that we had lied. What we said was at the Bretton Woods that we not necessarily were on a gold standard, but we were on a dollar standard. But the dollar was convertible to gold at $35 the ounce. And gold is a policeman on the currency. You know, there's a lot of people out there, even in our community, who say, well, the gold standard doesn't work. Gold is an inert element that sits on a shelf or somewhere. It has no, voting rights. It doesn't think. It's an element that uses money for 5,000 years. So what is the problem? The problem is we reneged on the promise. We printed more dollars than there was gold to back it up. Well, the purpose of gold is that you don't print more dollars than there was gold to back it up. So that was the problem. And that was recognized by primarily Ruff, is probably the right pronunciation, was the chief economist for de Gaulle, France. And so I said, well, if it's convertible, here's your dollars, give me the gold. And they started to drain the gold, window, as it's referred to. The UK was also. And that's when, the bluff was called. It's like a card game. It's like, you say you have this much gold behind your dollars. Well, I don't think you do. And I'm calling you out on it. And they did. And the U.S., didn't have it. So they had to stop. And of course, they used very careful wording. I don't know who wrote the speech for them, but the gold window is temporarily being closed. And don't worry, the dollar's still based on the full faith and credit of the United States. And the full faith and credit of the United States means the ability of the U.S. government, federal level, to tax its citizenry to pay off whatever debt they accumulate. So that's the way I see it. That's pretty accurate. And it's pretty important that people understand that, again, what we said earlier, that there's nothing magic about gold, really. It's that's been the people's choice for money for various reasons, and that it stands as a guardian if and only if it's adhered to. And if you go through monetary history, it seems that it never is. But it's not a gold issue. It's a people issue. It's a human issue. It's a cheating issue. And I'll go one step further, go to the goldsmiths, and that's where it all started. People deposited their gold with the goldsmith, and they would issue receipts for it. And then the goldsmith figured out that, only about 10% of the people ever come back and get their gold. So I can make myself rich by printing up more receipts than gold that exists, because we're not going to get caught. Everybody keeps their gold here. And so they started creating more receipts than there was gold to back it up. So it's the same old story, the same old crime, and it's happened again and again and again. So the gold standard works if and only if the human element is honest.
If you're enjoying this interview with David Morgan and I, please consider subscribing to our YouTube channel. And if you have been thinking about opening up a precious metals IRA or wanting to understand a bit more about it, please visit our website, www.silverbullion.com.sg. Look for the IRA tab and view the 3 simple steps to get you started. We'll definitely touch on that in a bit. But with what we're seeing today, the inflation, demand for higher wages, meaningful jobs, and other things like this, do you think we might be headed to some other form of a modern day Nixon shock happening again?
We could. I think one part that isn't really talked about enough, in my opinion, and that's the psychology of inflation. If you look at what the Fed says, and even people in our peer group, some really good thinkers about the monetary problem, they'll tell you that inflation will come down, or it's not going to go up much higher, or maybe food prices will, but oil won't. Oil's they have all these metrics. What very little is talked about is the psychology, and that's the most important part. And that's the one part the Fed can't control. They might be able to put in wage and price controls, which they've done in the past and don't work, they fail, but it gives people confidence for a small amount of time. But the psychology is, you know what? I'm getting charged more at the grocery store, and I've got a plumbing business, and I'm going to increase. So plumber doesn't sit there with an economic background or listen to shows like this. In most cases, I mean, there's some out there. I'm not trying to be negative toward anyone. But generally speaking, these people are making, too busy doing their jobs and running their businesses to get into the reason why. So they've got a 20% increase in their food bill. So he ups his prices 30% to compensate for that. So that's the psychological part of it. And then the guy that, is a house builder, well, he sees all that. So he sees his material costs going up, and he sees there's demand for more wages on his labor side. So he ups his prices to 50%. So this psychological run is something, again, I'm repeating, the Fed can't control. And once that psychology takes hold, that's when you start to get into what I call the acceleration phase of the inflation problem. And that's where you could, and I don't say would, could slip into a hyperinflation or something close to it. Again, there's countervailing forces. The way the system is set up, I've said this many times, but it bears repeating, that is the bond market is very sensitive to increases in interest rates. And that's why Powell is doing everything he can to continue to raise interest rates so that the dollar is perceived to have value. And it's starting to lower the value of the dollar in the bond market, meaning that if you own a 30-year bond, you've got to discount it substantially to be able to sell it. So that's a contraction of money supply. So you have an increase in um, you know dollars that are in M0, the true money supply, and you've got a decrease on the other end with what the value of the securities are, the bond market. And right now, we've seen a decrease in the money supply, which is the first time we've seen that since like the 1930s. So we are in an area of where we have both. As an Austrian, I'm not supposed to say that, but you see the psychology of inflation with a great deal of the public. At the same time, people like myself and others look at it from a numbers perspective and say, you know what, we're actually seeing a decrease in the money supply. So we're headed to the cliff, and I think we're over it, really. But we're in that pause, like the cartoon. I forget the name of the cartoon, but the bird is sitting in midair, and he realizes that he's going to fall, but he hasn't fallen yet. And away it goes rapidly.
Yeah, I'm guessing that that would be the Road Runner and his
There we
friend
go.
the
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 road runner.
coyote. But you brought up an interesting point about the psychology because it seems like the Fed is really trying to create this narrative to keep a form of psychology that the economy is doing well, economy is fine. I mean, we got a little dings here and there, but overall it's just fine. How believable is the Fed anymore? Has the Fed, or is it continuing to lose some of its credibility?
The whole system is based on trust or confidence. I like to use the word trust. But if you lose confidence in the monetary authorities, again, that's psychology. And they are using psychology, and that's good for you. And thank you for pointing that out because, the main people, let me restate that. Most people, even investors that are not students of monetary history, look at the stock market and say, well, we're making new highs. My portfolio looks good. My 401k is back to where it was. My pension's solid. I've got all this money. I'm diversified. And, based on numbers alone, it looks good. So there's a lot of people that buy into the rhetoric of the Fed and say, they are doing the right thing and interest rates are probably higher than I want, but they'll bring them down at some point. And they don't understand the dynamics of what happens at the end of a great currency crisis, which we're facing. But they'll learn that lesson. And many will learn it probably too late, because when the run to gold goes from the walk that we're at now to a full out sprint as a metaphor, when it accelerates as we go parabolic on the price of the metals because the currency is falling so fast, it's a hard time to get out. And their stocks will be, falling at the same time that gold's accelerating. And some will make the change. They'll switch. Well, I lost 20% of my portfolio in stocks. I'm not happy about it. And gold's gone up 20%, but I'm going to buy it anyway. Because in the final analysis, if we repeat what we've done many, many times in history, no guarantee it'll happen again, but it's very likely it will. We'll see gold as the money of last resort. The bankers are already front running the situation. I mean, I've talked about the run to gold over a year ago, and I think, one of the first to say it. And of course, many people that look at my work see it just from this perspective, and they don't get into the paid version, don't really might not buy into it, because even though central banks are buying gold at a higher rate than they ever have, it doesn't show up in the gold price. We're still hovering around 2000 or lower, but that doesn't matter at this time, because it's not a function of price alone. It's a function of requiring gold to be the money of last resort, if and only if the banks fail, meaning, and some are failing, that the trust is lost, the confidence is lost, people give up. And I think we will face that. It's always happened in the past. People tell me the dollar will never die. I agree that it won't lose all its value, it won't go to zero, but the new system will be implemented, as they are testing now with the Fed Now program.
David, going back to Nixon one more time, he was in the middle of the Vietnam War, and delinking the dollar to gold gave the U.S. the ability to fund the war, which French President Charles de Gaulle said his piece about the American exorbitant privilege. David, your opinion here. Had the U.S. won the war quickly, decisively, do you think a gold standard might have stayed intact?
Well, that's an excellent question. Really, really good. Yeah, I would say yes. I mean, it's a hypothetical, so there is no correct answer. But they did revalue the dollar once, and that is something that very few people know. So the official price on the Treasury right now is $42.22. So they changed it from the 35 that de Gaulle and the UK were getting their gold for. But I'm sure that someone that was, smart enough to realize what they'd done after the fact said, "Oh my God, we can't do this." Because what we're really telling the world is that the dollar isn't worth what it used to be worth, and we can't devalue it. But going back to your question, maybe 42.22 was enough of a devaluation of the dollar to keep us back where the gold was a policeman on the currency at that level. And if we stayed honest from that point forward and finished the war quickly, yeah, it's possible. But thanks for that question. I love to think. Sometimes I'm a deep thinker, sometimes I'm not that great on my feet, but that one I am. So thanks again.
Oh, you're welcome. Hey, every now and then I manage to slide one in there, so I'm happy about that too. But soon after the linking of gold to the dollar, we saw the linking of oil to the U.S. dollar, and the petrodollar was born. In summary, the U.S. would protect Saudi Arabia and others if those countries sold their oil to the world only in U.S. dollars, and as such, the U.S. has been in the Middle East ever since. David, in your view, is the petrodollar over with what we see with the BRICS nations and their demand for oil?
Absolutely. The Russians are basically the protector of Saudi Arabia now, not the U.S. We basically reneged on that promise. Not fully, but enough for the Saudis to say, that's it, we're done. And this is, this is an acceleration point on the destruction of the U.S. dollar as the reserve currency. It still will remain there, uh, but it's losing, clout and value. Not, it's losing value, it's losing clout, it's losing prestige, and it's being challenged at many, many levels. So the demise is is soon. And I just did a piece on BRICS and what it means. Our take on it was, different than most of what you hear on the web. And we said in the article, it could go another 10 years. Uh, Me being who I am, I also emphasize it could be a lot sooner than that, put that in bold and underlined it. I don't think it's got 10 years, but I do think it's going to be the last man standing. I don't think you're going to see a BRICS currency that will usurp the dollar before there is a new dollar standard of some type, meaning a CBDC or central bank, maybe even an IMF type of digital currency. Let me just make that clear because I don't want to confuse anyone. The most likely scenario is the central banks pushing for a CBDC on a national basis. But the IMF is very clear that in the future there will be a one world currency. But first, it'll probably be a number of nation states that have a CBDC, which of course China has and has been up and running for quite some time. And eventually, the goal is, and none of it may happen. I mean, China's a given; it's already taken place. But there is a lot of resistance to the CBDCs by surveys. Cato Institute, that I'm a member of, did an article that, of course, I got in my mailbox about their survey. And I forget the percentage, but it was a high percentage that were against the CBDC. Some of the states of the union are passing laws that say we are not going to adopt a CBDC. So there's a lot more resistance to this, what I'll call the new proposed system, than the layman might think.
Right. I think even Jerome Powell, with reference to the CBDCs, he said that the Fed actually cannot implement any type of CBDC without congressional approval or consent. So this ultimately, for the U.S. at least, could come down to voters.
Yes, that's a good point and an excellent. In fact, that's probably, excuse me, the more important point. I mean, if they obey the law, and I'm laughing because there's a lot that they're not, but yeah, they basically do have to have congressional approval. So that's another, let's say, roadblock to implementing it. However, they do have the Fed now working, and they didn't ask for congressional approval of that. So it wouldn't surprise me to see the Fed just circumvent it, and some executive order comes out of the current administration saying that they require it because of the monetary crisis and blah 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 blah. Congress isn't involved.
The Fed now, do you think this is going to be the precursor for, I mean, just getting things ready for universal basic income coming down the road?
I think it is. I think more importantly, and wrote about it again in the last premium service report, my paid service. This world coined by the Sam Altman is something that very few people are familiar with. But it's the one you know about. It's with the silver orb where you get an iris scan and you get, world coin given to you, free money. I think that is the precursor to a UBI, universal basic income. It's a perfect setup. And Sam Altman is a technocrat through and through. I mean, really what we're facing is a technocracy. It's not a political crisis of a left-right paradigm that everyone's taught and constantly bombarded with day after day, minute by minute, hour by hour. That's all you hear is left, right, blue, red, you know. But that's a diversion. The truth is we're in a technocracy, and that is apolitical. It's based on AI and engineering. It's based on a resource-based economy, and the artificial intelligence taking a look at what the requirements are for any given sector. And that's why if the CBDC is implemented, the AI will be able to determine what the resource base is and the carbon phenomena, which irritates me. I won't go there. And what your carbon credit score is. And therefore you'll get, your allotment for meat, your allotment for pizza, your allotment for fuel, your allotment for travel, whatever, based upon the algorithm and you personally. And it'll be a complete total control mechanism. And that's what they want to implement. There's little doubt in my mind that's where they're going. And if you go a step further, which sounds conspiratorial, but if you do enough research, you'll find it, that with the right elements in a human being, you can actually be, what's it called? We're in five. 5G, 6G, or 7G. The Internet of Things is 5G. The Internet of Persons is like 6G. And I gave a little bit of that at the Red Pill conference when I spoke earlier in the year at the Red Pill in Utah. So how do you become an Internet of Persons? Well, you have to have a connection to the Internet. Well, how does that take place? Well, it takes place with graphene oxide. But got a little off track there, but I am a big picture thinker. I look out in the future. I see what's coming to the best of my ability. I tell the truth to the best of my ability. That's conjecture. So is CBDCs in a way. But nonetheless, chance favors the prepared mind. If you understand the direction and most of the stuff is already in the UN documentation if you take the time to read it. So we are in a system that, if you go by the Bible, or at least have a quick look, treat it as a metaphor, or treat it as reality. It still states a lot of this stuff is coming with the cashless society, the ability to buy and sell, and what I call the beast system would look like.
Yeah, amen to that. Um, it's amazing how far things have since 71 closing the gold window, how many more things have opened up because that gold window was closed. And I just want to touch on the BRICS for a little bit more. You think this is going to be a trade currency? I mean, if it is gold backed, let's say it is gold backed, is it going to be just a trade currency for, say, the balance of settlements between nations, or is this going to be a type of a everyday currency used by everyday people?
Well, initially, nations to nation settlement, definitely. It won't be for the people. It would have to be convertible to gold in order for it to resonate with the people, I believe. And, I'm not going to read you the whole report because even though, I wrote and edited most of it, uh, it's just we don't think it's as big a deal as a lot of people do. I mean, it is a, countervailing force, but there's also coming back to our initial, discussion, it's a trust issue. And even though they've got, the BRICS and Saudi Arabia, so it's the BRICS, Brazil, Russia, India, China, South Africa, and Saudi, and 20 others that are lined up. Uh, these are there's trust issues between those countries. There's customs, there's work ethics that are different, there's different holidays, there's all this stuff. So it's not as easily adopted as some of our deep thinkers have already indicated. So I think I said enough on it. I don't see. Uh, I see a possibility where all of this uh, arrogance that the central bankers have and their ability to control and their ability to keep their power and control through the monetary system may be much more fragile than they think. And I just want to point out a few things. I'm going to put a little document over so I'm be reading here because I don't want to miss the exact numbers. But the Pacific, across the Asia Pacific, cash is used for 16% of all sales. Thailand uses 63% cash for sales. Vietnam, 54% for all sales, and Indonesia, 51%. So these nations are really used to using cash for over half of their payments. In Europe, cash accounts for 26% of all payment. Norway is the lowest level, 4%. Spain is about 50%. In Latin America, cash is the way to pay 28% of the time. And in the Middle East and Africa, they use about a 44% cash basis. North America, about 11% cash basis. So that's an important set of factors that I wanted to get out there on your show to let people know that there's a lot of people in the world that use cash still. And to go cashless, is not going to be as easy as, some indicate. And I'm one that's indicated we're going cashless. But I've actually said, I want to say it again, there's no guarantee we're going to CBDC. I mean, we could go where the system fails and it's basically chaos in quotation marks, where maybe some banks are closed and you go to cash only, meaning, physical notes is the only thing that's trusted. And it could get out of their control, in other words. backwards. I mean, there could be a systemic risk through the banking system where the banks stop trusting each other, which is exactly what happened in 2008. If you let me continue, I can explain it quickly. In 2008, when the banking crisis hit, the banks stopped trusting each other because of not necessarily bankers' acceptances, but uh, let's say commercial paper that they didn't know what the value of it was. So am I going to trade a mortgage-backed security with you? I don't know. I know it's crap, but what's it worth? So the Fed came in very quickly and said, give me that crap, give me that piece of garbage, and I'll pay you what the par value is. So you say it's worth 10 million, I'll give you 10 million in treasury bills, the most trusted at the time uh, security. And that went across the board. And that's what saved the system. But if the Fed didn't intervene and take crap and buy it, so, if you want to really decrease the balance sheet of the Fed, and this isn't a joke, all you have to do is take what they hold on their balance sheet and market to market. Because really the securities they hold in mortgage-backed securities is not worth what they put on their books. It's worth far less because they have a lot of garbage on there, but they paid full price for it, or nearly so. So I digress, but I wanted to make that point. I know you have a sophisticated audience. I'm sure most of them follow most of what I'm saying. I'm not trying to talk above anyone's head, but if this is my passion, this is what I really want the people to understand. I'm doing my best to put it in layman's terms, but the system is really in bad shape.
Yeah, no, I appreciate it. You're excuse me, you're making a lot of great points here, and I go back to when you said that word psychology, because when I look at the central bank digital currencies, is it something we need or is it something we want? Where's the psychology in this? How does it play into this? Or is it going to be something down the road where some event or whatever it is may happen where we may actually say, yes, give us that CBDC. We want it. We need it.
Yeah, the psychology is to make people think they want it or need it because it's, instant payment 24/7. You can do a payment on Saturday and realize you got it in your account. And there is some benefits to it. There's no doubt. I hate, wiring money, and I do it a lot. And it's cumbersome at times. So there are advantages, but that's a psychology. They want to sell it based on the benefits. But we don't need it. They need it. They need it. They, the banks, the central bankers, they need a new system. This one's failing and they know it. So they're the ones that are going to push it in any way they can. And of course, selling it, the psychology of it, is a very important point. But they also can force it. And right now, um, there's 1.7 billion people that are unbanked in the world. And there's a great percentage that are uh, in the banking system, but at a very low rate. So the amount of people that are not banked at all is almost 20%. But the, the powers that be want, full implementation of everyone. Well, the way they do it is with the digital ID, which is basically what this world coin is about with your iris scan. And what's interesting is most of it will be done over the phone. Well, the adoption rate for the phone is 93% of the world's population. So you have almost everybody with a phone. And if you put their digital ID on their phone and connect the banking system, the new banking system, to that, you've got almost 100% adoption. The people that don't have a phone, they'll just give them one so they can be in the system. That's what they want. Again, I'm emphasizing what their plan is. And again, it not necessarily is going to take place. But there will be a time, in my view, where people run for it. I mean, look at all the 2 million people that have already adopted WorldCoin. They don't even know what it's about, except it's free money for them. And it's cool to get their iris scanned by this orb. So there will be a time when people get desperate because of the depression, and the worldwide depression that we're just entering will gain momentum, unfortunately, where food will cost so much and there'll be a shortage of it, or an inability to buy what you need to eat. There's a contraction in the global economy, not an expansion. The only thing that's expanding is the money supply. And that is, I'm going to digress for a second, but people are talking about, well, the GDP is up. The GDP is, and it is based on the metrics that they use. What they don't explain is it takes about $4 or $5 of debt to increase the GDP by $1. So when you increase the GDP, which it is, it's because we've borrowed more trillions more dollars. And that filters into the way they calculate the GDP. But in reality, how fast can you grow if you got to spend $4 to get $1 in productivity? So think about that one. Another one I've got to throw out way off base, but it's the same thing in the food system. If it takes 10 calories of food, 10 calories to create 1 calorie of food, how long can that last? And we're based on a consumer economy. If we cannot consume, if our amount of cash available to buy stuff is depreciated so much that all we can afford, or maybe not, is our rent, our gasoline, and our food, we don't have any discretionary income. We're not going to buy, anything that we don't need, theater tickets or eating out at restaurants or getting your nails done or your hair done or all the stuff that is, let's say, not a need. So we're going down, in my view, and it will accelerate. Right now, stock market's high. People feel they're okay. Maybe their neighbor lost their job, but they're not really that concerned yet. And that's reflected by basically the stock market. The bond market's already taken a hit. And the bond market is far more important than the stock market because that's what we rely on. Going back to the gold discussion, I mean, everything's based on what is the trust and value of X? What's the value of a dollar? Well, it was $35 an ounce, and it was devalued to 42.22. And what's it now? If you devaluate it by the amount of true money supply, M0, and you look at the amount of gold that the U.S. Treasury purportedly has, you're looking at something over $15,000 the ounce. Now, I don't think we're going to get to that level. I do think 3, 4, 5,000 is definitely achievable, which is, more than a doubling from here. I think silver will double and redouble, but regardless of what I think about the monetary price, you got to remember the price is important, but it's really the value, meaning what does that ounce buy? That's what you really want to measure. And I'll leave it there.
Yeah, it's a great point. Again, I think one of the values that is also included in there is freedom, and we're seeing how the removal of gold has also brought in the removal of freedom. So are you seeing that around you as well?
Yeah, I did a video. I forget the name of it. I said this on another interview I did earlier in the week. And the video I did was said this: doesn't matter how much money you have, fiat or real gold. You got a stack of gold and silver. If you've lost your ability to say what you want to say, go where you want to go, be what you want to be, buy what you want to buy, then you've lost your freedom. And what's the price of freedom? It's priceless. It's worth more than all the money in the world, as far as I'm concerned. Not everyone will agree with me, but if you lost your freedom, it's just like this Chinese system with the social credit score. You can be a billionaire. So the idea of having financial freedom really no longer exists in China. You can have multiple millions, and yet if you are doing something that the government doesn't like, they can dox you with the social credit score and say, well, you can't buy that apartment, or you can't go to that special school, or you can't travel on an airplane, or whatever it is. And that is being implemented in China as we speak. It's been that way for some time. So now you can't buy your way out of it. Like a lot of times, financial freedom meant you had freedom. Not anymore. The system has been changed drastically, and that system is coming this direction, even though you might hear differently from the authority figures, which are pretty well known to lie out at both sides of them.
So pretty interesting. We started out talking about Nixon, went through Nixon shock, and we're still feeling the Nixon shock wave, still rippling through everyone's lives all the way up until today and future generations. David Morgan, before we wrap up, can you tell us about how people can follow you and the services you provide?
Sure. The best thing is just go to our main site, themorganreport.com. Get on our free list. We have a free newsletter, and I also have a paid service. If you just go to subscribe, there's a sales letter, a couple of videos, and there's a few options. Uh, and you, any question that a paid member has, I guarantee you I'll answer it. Also, the consultations that I do are pretty pricey, I admit it, but if you're a member, they're half price. So you basically get, as a member, a free consultation. You're allowed to write a couple questions a month guaranteed. So that's just part of the service. If you want to have a one-on-one with me specifically, it's half price. So, business is going well. I have no complaints, but it's interesting. We're really not gathering any new members. And I'm rather surprised with the economic conditions being what they are. But right now, I think we're in a pause. I think a lot of people that are awake and know what's going on don't know what to do. So they're doing nothing. They're keeping their bank, their money in the bank. They're not buying gold. They're not buying silver. They're not buying stocks. They're not going to change their real estate portfolio. They're just, static. Nothing's changing. And that's not a bad place to be. But there will be a time where they'll need to reallocate. And that's why I'm so bullish on the metals. I know you asked me to give out my information, but I have to add this to the end. Right now, there's about $5 trillion sitting on the sidelines. That's a lot of cash. And 1% of that is $50 billion. And $50 billion represents 2 years worth of silver supply. So if 1% of the cash got scared and saw, what we talked about, confidence and trust, mistrusted the system, 1%, that take up 2 years of the silver supply. So where do you think the price of silver could go?
Yeah, only up. Only up. David, I'd like to thank you for your time once again. I hope we can do this again soon. And for our viewers out there, let's all be sure to send out a prayer to David, and hopefully things will get better for you.
Thank you.
That was David Morgan sharing his views on Nixon's closing of the gold window and more. To see more of David's views, please visit www.themorganreport.com. If you like this video, please do give us a thumbs up, subscribe, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.